Okay, Chapter 20, Process Cost Accounting. So, what is process cost? So, it's used in the production of small, identical, like low-cost items or mass-produced items. I think a classic example would be like Campbell's Soup, making their soup, or gasoline refinery, and so forth like that. There can also be small mechanical products like pencils that are just mass-produced, and all the products are the same. And so in comparing them, you have like for the job order systems versus the process system, here you have custom orders, right? For instance, a home builder who's customizing each home. Whereas in the process system, it's a very repetitive, very the homogeneous parts that all look alike, exactly alike. There's high volume production and so forth. So, whereas the job order system is low volume. You know, you're working on one project at the time that will be different than the next project. Similar, but always some variation. That is not true with process systems. So, how is the accounting different? They're virtually almost the same, except for down in this area where the processes, you've got to bring it down to two things, down to the unit cost rather than the cost for each job is down to each unit. And the second thing will be what's called equivalent units of production, which is you're taking partial completed processes and say, well, what percentage of that would that equal on a percentage basis of fully completed? So let's look at this too. Again, you will still have the direct materials, direct labor, and factory overhead as you do in the job. So in process, it's the same thing. No change there. You do transfer it over to finished good, but you do have to break it down differently, cost per unit processed versus cost for each job. So you're taking it down to the unit, which is all looking the same. For instance, an oil refinery or a gas refinery, that 1 gallon of gas is going to be no different for the next gallon of gas. But what would the cost down to the smallest unit? Again, your objectives are the same to determine the cost of the products. Same inventory accounts. You still got raw materials, work in process, and finished good. And same overhead assignment method. So there's really not much different here. You might have a predetermined rate. Your activity level might change. You might be driven by materials instead of labor. Because often the process method is highly industrialized or machinery, not involved as much labor. It might be more material conscious. So that predetermined rate, the activity might change. That you're using the basis for calculation. Journal entries are going to be the same. And it's just, again, the only difference is how the cost of goods is transferred to finished goods. That's the only difference. So, and that being that we're going to bring it down to the cost per equivalent unit. So what does equivalent unit mean? Process cost, I'm going to skip this slide. I think it's virtually the same what we've been talking about. Okay, equivalent units of production. So costs are accumulated for a period of time by a process or the development department that is doing this processing. And then the unit cost is computed by dividing the accumulated cost by the number of equivalent units produced. You notice it doesn't say completed units, it says equivalent units. And what you're looking at is the equivalent units is a concept that expresses a partially completed unit as a smaller number of fully completed units. So an example would be you've got maybe two different processes and one's halfway done, the other one's halfway done. That would equal like one completed unit and so forth. So you're taking a percentage of that to percentage of that, and they can vary for different processes or different stages of processes. And you're going to get how many equivalent units have you made this much. So for instance, if they're working on 4,000 units, if it was completed completed, that would be 4,000 units. But you're only 60% complete. So you multiply that 0.6 into this 4,000 to get 2,400 equivalent units. So don't be confused. Equivalent units doesn't mean completed units. It's just a percentage of measurement. Okay, they're going to give you some examples. Again, you started at 15,000, you completed 10,000. Well, you know you're going to add the completed units, and then you're just going to multiply the 5,000 units by the 0.3. You're going to get 1,500 plus the 10,000 equals 1,500. So you got 10,000 plus 5,000 times 0.3 equals 11,500. So what you're bringing, the cost per equivalent unit is the product cost for that period, and then how much. Now that period might be for a week, a month, a quarter, or the year. So the key component to remember for this chapter will be the equivalent unit calculation, both on a unit basis as well as percentage of completion. And again, so an example would be 40% of your material, 25% of your labor, and then you have to multiply that out. 40% of your material, and you just simply multiply that, add them up to get that equivalent units. Again, so now they're viewing a weighted average cost flow. It's not going to really change in that much. So you're going to have, again, percentage of completion is 100%, 65 units started, units transferred, and then you're going to simply multiply that out. I don't think I need to explain this in detail. It's easier to read it than it is to listen to that, I think. So the two units are simply, I think a good way to look at it is percentage of completion would be the amount of equivalent units. Here, if its percentage of completion is 100%, it would be just, that is your equivalent units. Here it's 25% times this number to get the 5,000, then you would add it up. Because the reality is on a process system, you might start a new batch on the middle of the month, and maybe it's 3 weeks or 20 days to complete this process. And so sometimes the materials will go in maybe more in the beginning or maybe later at the end. So the different stages will vary according to how much direct labor and how much material is being utilized for each stage. Again, equivalent units completed and transferred out. Again, they're talking about completed here. And then equivalent units for ending process, 20 times 5 times that. You simply add that up. And then you're bringing it down to the unit cost. Not the total cost. You're bringing it down to each unit. So you can multiply that. And then, again, cost to account for your beginning inventory. You're going to add up all these other, your direct materials. None of that's going to change. Transferred out, cost of goods manufactured, and now they're multiplying it by the unit price to get these numbers out. They're always taking it down to the unit price, and that's why you have to calculate that. Again, process cost summary shows the flow of units and costs through the work in process. It does provide, obviously, information for financial statements. It helps the managers evaluate their department managers' performance, and it helps managers control their departments, because this is how they can monitor inter-period how well are they doing on there. Cost charged to production, again, they're adding it up. Total cost to account for, $27,600. units completed out. That's not going to change, and then it's just on the, and now you're multiplying it by direct materials and overhead of 5,000. So it's always multiplied by this using the percentages to get down to this, and then you would simply add it up and divide it by the total price or the total volume to get your unit cost. And that's why you need to do the equivalent units to get how many units you on a percentage basis have you completed to get it down to the unit cost. You can't just go how much was fully completed, but how much have we done even on a partial basis. And you're just going to go through a variety of examples on that for multiplication. Trends in process operations, much like job orders, there's the designing the process design, working with engineers, how can they simplify it and refine it, make it more efficient, more effective. Just-in-time production, you just want to bring in just the amount of your raw materials as needed. Again, you're listening to your customer, what changes is happening in the marketplace. There's definitely a lot more automation, and this is also occurring in the service industry. But definitely a lot more automation with process operations. I'm not going to go to the global view. Hybrid costing, I'm not going to test this, but there are some products that are individualized, as well as some of it might be process costing. So they'll do a thing called hybrid costing. Some journal entries, again, you're just moving your raw materials, your goods in inventory from the raw materials. You're just moving it through that cycle, raw materials into work in process, into completed units, into cost of goods sold. Be careful of which ones you're debiting and which ones you're crediting. The cheat note will help you here. I'm not going to go through all these. I think this is better read. You want to keep track of which ones you're debiting and which ones you're crediting.